After studying this module, you shall be able to know about stock market scams, evaluate the differences in scams, know about some measures taken in the light of these scams. Frauds in financial market. In this module, we will have a detailed discussion on different scams in financial markets and measures which have taken after the scam. It was March 1, 2001 when stock market investors, Government of India and market regulators were shocked to see the stock market crash by 176 points. This unexpected crash in the stock market stimulated the Securities Exchange Board of India to launch immediate investigation into the volatility of stock markets. SEBI, the Security and Exchange Board of India, the capital market regulator, also defined to examine the books of several brokers who were supposed to activating the crash. The Reserve Bank of India, the regulator of money market, also recorded many banks to reveal their capital market exposure to check whether they have crossed the permitted limits. It was found that a private sector bank has crossed such limits. This all event led to then President of Stock Market Anand Rathi to resign, as there were allegations that he has used some privileged information which contributed to the crash. This crash shook the interest of many investors' confidence, and there were suicide committed by many investors. A detailed investigation was held, and the first person who came to light as a single-handed manipulator of stock market was Ketan Parekh. He was exciting with deceiving Bank of India of about $30 million amongst other charges. Ketan Parekh has done chartered accountancy and he was doing his family business. His father was a broker who started NH Securities. Ketan Parekh thus got the traits of stock market from him. But over the years, he built a network of companies. It was reported that he had connections with many famous personalities, including movie stars, politicians, etc. The companies in which Ketan Parekh held stakes include Amitabh Bachchan Corporation Limited, ABCL, Mukta Arts, Tips, British Nandi Communications. He also had incentives in HFCL, Global Telesystems, Z Telefilms, Crest Communication, Pentamedia Graphics, Ketan Parekh. Ketan Parekh selected these corporations for savings with help from his study team, which listed high development companies with a small capital base. Ketan Parekh participated in these companies to take the benefit of low liquidity of these stocks. All these stocks came to be known as K10 stocks. Eventually, with fluctuation in stock market, these shares rose by large percentage increases. As a result, many other brokers and fund managers started investing in these stocks, K10 stocks. By January 2000, K10 stocks frequently featured in the top 5 traded stocks in the exchanges. As such, huge sums of money were being pushed into the market. It came to be tough for KP to regulate the action of the scrips. Thus, it developed difficult to handle such large stake. In spite of being a successful broker, he did not have money to buy such large stakes. So he acquired loan from several companies and banks. His financing methods were fairly simple. He accepted shares when they were interchanged at low prices and saw the values go up in the bull market while endlessly trading. When the price was high enough, he promised the shares with banks as deposits for funds. He also loaned out from companies like HFCL. Ketan Parekh's main ally was a small Ahmedabad based bank, Mahavapura Mercantile Cooperative Bank (MMCP). Ketan Parekh and his associates started tapping the MMCP for funds in early 2000. MMCP lent funds to Parekh without proper collateral security. It also exceeded its capital market exposure limit and invested majority of its fund in Ketan Parekh stock. In fact, he also used MMCB to issue pay orders on the basis of checks drawn on Bank of India and many other public sector banks. It was alleged that Mudhar Capital, a company run by Vineet Parekh, the son of MMCB chairman Ramesh Parekh, had acted on behalf of Ketan Parekh to borrow funds. However, Ketan Parekh's idea of raising funds from banks for issuing shares as collateral securities worked well until the stock market was functioning well. But as due to crash in Nasdaq, all the market across the world got hit and share prices were falling down, there was great demand from investors who take out their funds from market. This leads to payment problems in the market. In fact, the CSE crash was big deal for him as many of his agents and brokers were there who invested in his K10 shares. The CSE broker started pressurizing KP for payments. KP again turned to MMCP to get loans. The outflow of funds from MMCP had increased considerably from January 2001. Also, even though the formally loans to KP was contrary to proper guarantee and with suitable documentation, it was alleged that this time KP was allowed to borrow without any security. All this made it clear that SEBI was still not efficient enough to regulate stock market. It is reactive rather than proactive. Market regulators were relaxed and of course had no clue of it. They had not paid attention to the rising prices of securities and such a volatility in the stock market. They were not having any information. In fact, Ketan Parekh was exposed not because regulators come to know of it by their checks or findings, but due to the complaint made by Bank of India. Harshad Mehta scam. Harshad Mehta, the big bull of stock market under whom Ketan Parekh was a trainee, is one of the biggest stock market scammer in 1992. Mehta committed suicide through the ready forward deal. A ready advancing deal is one in which one bank gives funds to additional banks in contradiction of government securities. In a ready forward deal, securities were not moved back and forth in actuality. Instead, the borrower and the seller of securities gave the buyer of the securities a bank receipt which confirms that the securities are pledged by banks. But these bank receipts were removed through a broker. Harshad Mehta, having understood the system, started searching for those banks who can give fake receipts to him. He figured out two small and little known banks, the Bank of Karat (BOK) and the Metropolitan Cooperative Bank (MCB) for this purpose. Once these imitation BRs were distributed, they were agreed on to another banks and the banks in turn gave money to Mehta. Banks were under the impression that they were lending against government securities when this was not really the case. Harshad Mehta took his money and invested in stock market to drive the prices of some stocks in the stock market. He used to sell such shares when their prices are high and thus leaving a profit share for him after making payment to the lender bank. Everything was going good as long as stock prices kept going on, and no one had a clue about Mehta's modus operandi. Once the scam was open, though a lot of banks were left allotment bank receipts which did not have any value, the banking system had been double crossed of a huge amount of approximately rupees 4,000 crores. Comparison of both these scams. On comparing both these scams, it was realized that both these scams had many things in common with some differences. The most important is that both these scams had banks as one of the important supporters for making the scam a success. Thus, both these scams made us to ponder the effectiveness of Reserve Bank of India as well as for keeping a check on the commercial and other banks. Similarities of both these scams. Both of them used to buy stocks at low prices and then try to push up the prices of those shares. Both of them involved promoters of companies so that they can make their play a success. Both of them duped banks as well as took help of some banks for their benefit. Both these scams happened in spite of the presence of SEBI. Differences in both these scams. Parekh had a background of being from a family from brokers, whereas Harshad Mehta was a self-made man. Harshad Mehta loved to be in focus and media. He was a columnist in a newspaper to guide investors on what to buy, which helped him a lot. On the other hand, Ketan Parekh preferred to not to be in limelight. Harshad Mehta made wrong use of ready forward and bank receipt for his purpose, whereas Parekh used pay orders and circular trading. Harshad Mehta's scam had less number of brokers engaged in it as compared to Ketan Parekh's scams. Measures taken after the scam. The Government of India passed SEBI Act 1992 after the Harshad Mehta scam and regulatory powers were conferred to it. The following measures were also taken. Suspension of those office bearers who were involved in insider trading. Many directors of companies who were also brokers were also suspended. A volatility margin requirement on net outstanding sale position of FII, financial institution, banks and mutual funds were imposed. Ban was put on short sales in March 2001. Reduction in gross exposure limit for broker to 10 times the base capital of NSE and 15 times of other stock exchanges. Banks were required to offer collateralized lending only through NSE and BSE to increase liquidity, introduce trade guarantee funds to guarantee all transactions. Measures taken after Ketan Parekh scam. Trading cycles were cut short from week to a day. Badla system of trading was banned. Many interactions were not happy with the choice of prohibition the Badla system as they felt it would rig the liquidity in the market. Introduction of forward trading in the form of exchange trading derivatives, withdrawal of brokers' control over the stock exchange. Summary. Both these scams have taken place in the presence of SEBI, so it is required that SEBI should become more active than being a reactive agent. It should ponder on the exchanges that can be made to improve the efficiency and effectiveness of stock market. Not only SEBI, the RBI and Government of India should also make some stricter provisions to keep a check on the banks, especially those banks which are in smaller region and have less operation, as in both these scams banks has played the role of helping hand. It is required that more actions and reactions takes place, otherwise it would be worst if same past repeats again in new name and new face and in a new environment.